Hi, Mickey. Welcome back.
Hey, thanks, Dale. Thanks for having me once again. Always my pleasure.
Oh, you're welcome. I was searching for you. So you didn't bring anything you wanted to screen share, did you? So I'm going to show the charts while we're talking. And you sent me an article that you've recently written that gold's not going anywhere soon. How much longer? I know, gold bulls say don't wait to buy gold and wait. How long are they going to have to wait, Mickey, my friend?
Well, I'm buying gold now,
Okay.
which I do on dips, or I will be buying gold at 1273.50.
Okay.
But I just
traded there
gold
today.
Yeah. So I think this is a buying opportunity, and it usually is in the summertime, Dale. I guess I'm a bit surprised how early what I would call the summer doldrums has started. It usually doesn't start until sometime in July. But the gold bulls, the gold bugs, I came down on them pretty hard in this musing I posted yesterday. The idea of $2,000 gold, $5,000 gold, $10,000 gold, in my opinion, is simply ludicrous. If that happens, you're better off owning guns and bullets along with your gold.
And food, because you can't eat it.
Yeah, I say gas goods, gold,
and we may need to do this if this trade war gets out of hand. So let me ask you, what was the gist of the article that nothing's going to happen for a while? Is it because you expect continued dollar strength to depress it or put a lid on gold prices? What's the rationale for that last article that gold bulls are going to have to wait for a while?
Yeah, it's a short-term view. So near term, I would, I'm looking out past Labor Day before I see an uptick in gold at all. And really, it does have to do with the U.S. dollar now at over 95. Trump is on record of wanting a weak dollar, but we have all this geopolitical intrigue going on in the world, and a very weak euro. As a forex guy, you're aware of that. So and then the seasonality of gold. We do extensive research on commodities and how they perform in an average year, and this is a seasonal low for gold. So I'm looking no earlier than after everybody comes back to work in September and the markets pick up for any uptick in gold.
Do you see any chance of, silver has been selling under production price. The recent rally in silver didn't quite get it back to production costs, and gold production costs are where, about 1180, 1200, Mickey?
Yeah, I don't think very many gold companies are very profitable at this point. Basically because you've got to really be careful when you look at their balance sheets and financial statements, because they use non-GAAP, non-general accounting practices, ways of doing their books. So if you add in all their total costs, including sustaining capital, which they usually write off and use as or depreciate and amortize those costs over the life of the mine, which is not really the way that they should be doing it. They're not profitable. Concerning silver producers, silver has bounced up against resistance a couple of times, and then the good old US dollar takes another tick up and silver loses its ground. The gold silver ratio, which we pay a lot of attention to, was above 80. Now it's fallen back down into the high 70s, but that's still in the 80s. That's about a 5% anomaly over the last 45 years.
Okay. I'm looking at gold here, and to me it looks like we're threatening kind of a major uptrend here. I'm just wondering if you think that into the fall we might be able to see 1200 again if that's a possibility. Not many people talking about that. 1240 is the next real important support level. That was the low that we had in the fall of 17. Maybe some fear coming in around midterms, Mickey. Could that be a possible catalyst for gold? And the last question, you bring up miners. Isn't one of their largest inputs costs being energy or cost of energy to do the mining? And would lower energy prices help their balance sheet?
Well, I'm going to take your last question first. And yes, energy costs are one of their major inputs, energy and labor generally. So the price of oil going up is going to affect gold producers. In the U.S., the strong U.S. dollar is negative for gold producers, but that's positive for gold producers with weak currencies. Concerning the test of gold on the downside, I think that's a possibility. It looks to me like the bears are in control right now. We saw another drop on about halfway through London market this morning, another $5. So gold's weak. The midterm elections, I think, could be a catalyst for gold as we get closer to that. You know, really, the thing that's going to happen, I think the only way gold is really going to move one way or the other, especially to the upside, let's say, is if we have a black swan event or some geopolitical event, or the hedge funds come big into the market on one side or the other. I think that's necessary probably for gold to go on the uptick, and then really the seasonality thing. And once we get through Labor Day, gold generally goes up because you're into the high physical demand, especially from India with the festival and wedding seasons in India.
Okay, up until the last couple days, in fact, midweek last week, the gold-silver ratio was coming in pretty good. Silver was way outperforming gold on the upside, had a very nice rally, well over $1 from its recent lows, while gold just moved sideways. Any view on the gold-silver ratio? It seems to be correcting since Friday, where silver is weaker than gold. Do you believe in that gold-silver ratio continuing to possibly regress to the mean at the, say, 40-50 level?
Well, eventually it will, Dale, but I think that's a medium to long-term view. You know, we've done a lot of work on the distribution of those ratios since Nixon started taking us off the gold standard in 1971. And historically, that range probably average or even the mean would be about 55 to 1. For it to get to 40 to 1, silver's going to have to take a big run. But in volatile markets, silver always will either outperform or underperform, depending on if it's on the uptick or the downtick. Silver is a much more volatile metal. There's going to be resistance at $20 though. So, you know, last time silver touched $20, and it was, if memory serves, a couple of years ago. Didn't stay there very long. There's always a lot of silver sitting on the sidelines that will come back into the market when prices get to the point that people think they can make a little money on silver. If that ratio gets down into that, say, 50 to 60 range, then you're going to see people like me who are gold hoarders and buy silver on weakness. Then we go and when that ratio corrects a bit, then we'll go and trade our silver in for gold because, pardon me, in my opinion, a lot of people's opinion, gold is the only real money.
Okay, so you know, I want to give you credit because when we first talked a few years ago, I think I was still with F.A.C.E. Copper was in a bear market, was under $2, and you're very constructive. Excuse the pun, because it's used in construction. The copper market under $2. The last couple weeks, We've had some damage here. I'm not sure if it's because of trade tensions, but it looks like even copper is vulnerable here. View on copper still constructive?
Well, I very much am on copper as constructive. I don't think it's in the short term, and I wrote a piece a month or probably 6 weeks ago about the confusion in the copper market, and the copper's been range bound. Sometime we're between 305 and 330 over since maybe October, and it doesn't seem to be able to break out either up on the upside or the downside. We saw quite a move in copper a couple of weeks ago, and that was solely predicated on the worries over strikes at Escondida, the world's largest copper mine in northern Chile. As those concerns have waned a bit, and the drop dead date on that labor contract is July 31st. As those concerns have abated somewhat, and also the Trump tariff turmoil going on right now, we've seen copper take another dive. But if you look at all the metals right now, they're pretty much tracking gold. Pardon me, they're tracking U.S. dollar index today above 95, and that's something on the order of a 8 or 10 month high for the dollar index. So I think we need a weaker dollar for these metals to perform to the upside. But I am very bullish on copper in the medium to long term. Just
okay.
On
I also know
supply demand fundamentals. Pardon me.
Okay. And I know that you were a big believer in the uranium market. I'm trying to pull up uranium symbol. I can't find anything that's going to work. I have a lot of uranium issues up here, but how about this? World Uranium Index. Okay, let's see what that looks like. So I'm not sure if you're familiar with this index, but it does show from 2016, pretty nice advance in uranium. What's your take on it? And will demand, maybe people will get bearish uranium because Kim Jong-un is going to stop his nuclear program, won't need as much uranium. Unless the Iranians take up the supply that North Korea is not going to use anymore, and I'm just being facetious. Looks pretty constructive here on this chart, Mickey. You still like it, and where do you play in that field?
Well, I do like uranium. If there's one thing I can be accused of being a permabull, it's uranium, and it hasn't happened as fast as I hoped it would or thought it would. But from a low of about $18 on the spot price, we're now at more or less $23 over the last year and a half, perhaps. But it's all about supply demand fundamentals in uranium, and we have had a short-term oversupply. We have lots of catalysts that have happened or are happening now that lead contrarians such as me to think that the uranium price is going to break out at some point. Now, no one's going to be able to tell you why, but lots of stuff going on with Kazakhstan, which is the world's largest producer, cutting back. Trump is on board with some sort of credits for domestic uranium producers. The real concern here, Dale, is the U.S. last year produced about 2% of the uranium it uses, and all in nuclear power plants. In fact, 99.99% of the world's uranium is used in power plants, not used in making bombs. Bombs are generally made with plutonium, not uranium.
Okay. So where do we get most of our supply? Kazakhstan?
Well, we get most of our supply from Canada. Second is Australia. Third is Kazakhstan. Fourth is Russia. 6 of the top 10 uranium producers in the world are countries that are unfriendly to the U.S., and we get about 40% of our supply from Russia and satellite countries in the former Soviet Union, specifically Kazakhstan and Uzbekistan. Not the most stable parts of the world, and
Yeah, that's
certainly not
interesting.
friendly to the U.S.
And how much from Canada and Australia, which might still be our friends, but becoming shakier because of what's happening politically and on the trade front?
Well, we get significant amount, I'm pulling this off the top of my head. I would guesstimate that we get something on the order of about 50% of our supply combined, 40 to 50% from Canada and Australia. But Dale, I'm going to take a bit of a different view here. Canadians are our best friends forever.
Forever,
These are
okay.
negotiating ploys, and the way Trump does this, we're going to kiss and make up with the Canadians. I think what really Trump is aiming for, especially with the Canadians in Mexico, is a North America trade-free zone. And I take the tack that there's lots of tariffs that the U.S. pays for Canadian goods, or we're restricted in shipping our farm products to Canada, as they have a supply managed economy up there. So when it all comes out the wash, we're going to be friends with the Canadians, I think.
Okay, well, I hope so. And, because Canadians and Aussies have fought side by side with us and have sacrificed many people in our efforts for freedom and maybe even political wars that weren't even that favorable. So I hope that money doesn't pollute the relationship that has this type of historical so many years behind it of blood and treasure and cooperation. So Mickey, I have your website up here, and
Yes,
looking at things that you do, you have a newsletter. Is that correct? Subscribe
yes,
to your musings. So our viewers could go to your website, mercenarygeologist.com, and get your newsletter. What the mentoring, is that what you do with other aspiring geologists, that you mentor them, or what kind of mentoring do you do here?
I mentor aspiring young people all the age from 7 to millennials in their early 20s, trying to encourage people to become geologists if they're young.
Okay.
If they are geologists, do a lot of mentoring on how to find a job, how to present an interview, lots of different sorts of things I do. I speak 2 or 3 times a year at mining universities, mining schools in the Western U.S. Occasionally I go to second grade classes and carry all my geology gear and try to encourage them to love the outdoors. I became a geologist because I love the outdoors and I love rocks. Had a rock collection since age 7.
Well, then you ought to, examine my head. There's a few rocks in there, buddy. So, it's always a pleasure talking to you, Mickey. And I encourage people, if they want to know, do you cover any kind of mining shares that you have an interest in here that you track? Or
yeah. If you, I currently cover 2 companies. I cover Trilogy Metals, which is an advanced copper explorer developer in Northwest Alaska. And I cover a company, a Nevada royalty prospect generator company called Ely Gold Royalties.
Okay.
And on my musings page, I have 2 different newsletters, if you will. And the mercenary alerts are about companies I cover. And And those are restricted to subscribers only for at least a month. So if you want my stock picks, you need to be a subscriber, but it's free. So hell, the price is right. Why wouldn't you? And so we've done quite well picking stocks over the years. And I encourage people to sign up and see what I have to say. I write a lot about commodities. I'm a hardcore libertarian, so I write about those sorts of philosophies and political stances too. So I think people will be entertained.
Okay, well, if you're a heavy metal fan, I'm not talking Metallica, I'm talking Mickey Fulp. Go to Mickey's website and keep in touch with somebody who doesn't look at mining shares from afar, but knows it from the ground up, literally, from going out there and visiting sites and looking at geological prospects of different properties. So thanks again, Mickey, for coming in to edify our community about what's happening here. And good hunting the rest of the year, and hopefully we have a Lazarus effect on some of these precious metals going into the midterms. That's what, yeah, I'm kind of with you on when I'm looking for lows. Late summer, fall event for me too. So it was great listening to you, and thank you for edifying us today.
Well, thanks for your kind word as always, Dale, and I look forward to talking to you once again and see if my predictions come to pass.
Okay, let's get back together in the fall and see how things are developing in the metals market. Everyone, thank Mickey Fulp, mercenary geologist. You could follow him on Twitter at mercenarygeo. Thank you, Mickey, my trading warrior brother.
Thanks
good
a lot,
luck
Dale.
and good hunting, buddy.
You too.
Okay, everyone, that's Turnaround Tuesday. See everybody tomorrow. Good hunting the rest of the day. Remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios.